One of India's most respected and most feared financial minds walked up to a podium today and said something that every Indian needs to hear. He said, "The shock is coming. It is coming big. Consumers have felt nothing in the last 2 months. That is about to end." He is not a politician. He is not an opposition leader. He is the founder of India's third largest private bank, a man who has compounded wealth at 48% every single year for nearly 3 decades. When this man speaks, markets move. And today, he is sounding the loudest alarm he has sounded in years. Welcome to BharatLens. Today we are talking about a speech delivered at the Confederation of Indian Industries Annual Business Summit, one of the most important gatherings of Indian business leadership in the country. The man who spoke was Uday Kotak. And what he said was not optimistic. It was not diplomatic. It was a cold, clear warning, delivered with the precision of someone who has watched economic cycles rise and crash for 4 decades. India is sitting in the eye of a storm. The storm has been building for 2 months. And Kotak is saying, the eye is about to pass. What comes next will be felt by every Indian household. Today on BharatLens, we break down exactly what he said, why it matters, and what it means for you. Before we get into the warning itself, let us be clear about who is delivering it. Because this is not noise from a commentator or a television panelist. Uday Kotak started with 30 lakh rupees and built a financial empire that today manages trillions. He has compounded shareholder value at a rate that would make most global investment legends envious, nearly 48% annually over close to 30 years. He predicted India's credit stress before it became visible. He warned about the Goldilocks period ending in banking months before it actually ended. He cautioned about India's current account deficit widening from Trump's tariffs before most economists caught up. He has a track record of being early and being right. That is why, when someone on social media this week posted his remarks with the caption, "When Uday Kotak sounds the alarm bells, I would pay heed," that post went viral in minutes. So what exactly did Kotak say at the key summit today? His central message was blunt and unambiguous. For the last 2 months, since the Iran war began in February 2026, Indian consumers have felt almost nothing. Petrol prices are unchanged at the pump. Diesel is stable. LPG, despite 2 hikes for commercial cylinders, has been held for households. The government has absorbed the pain through oil companies, through tax cuts, through import substitution. The result is that most ordinary Indians have gone about their lives without feeling the full force of a war that has driven crude oil above $100 per barrel and disrupted 20% of global oil supply. Kotak's warning is that this insulation is ending. He said explicitly, the shock is coming and it is coming big. The oil companies and the government cannot absorb the differential indefinitely. At some point, and that point is approaching fast, the energy price shock will transmit directly into the Indian economy. Into transport costs. Into food prices. Into manufacturing costs. Into electricity bills. Into the price of every product that requires energy to make, move, or store. And when that transmission happens, it will not arrive gradually. It will arrive suddenly and comprehensively. But Kotak did not stop at the oil shock. What makes his speech genuinely important is the larger framework he placed around it. He said India is not just facing a short-term energy crisis. India is navigating a fundamental transformation of the global order itself. He described the world as having moved from the cooperative Davos mindset, the post-1991 era of globalization, free trade, multilateral institutions, and the assumption that economic interdependence would prevent conflict, into what he called a tribal world. A world where the dominant question is not how do we trade together, but who controls what? Who controls the oil? Who controls the shipping lanes? Who controls the technology? Who controls the artificial intelligence? Who controls the critical minerals? He pointed specifically to the Strait of Malacca, the narrow shipping channel between Malaysia and Indonesia through which nearly 40% of global trade passes, including a massive share of the energy and goods that reach India. The Strait of Hormuz, now in a war zone, disrupts India's oil supply. The Strait of Malacca, if it were ever threatened, would disrupt India's entire trade backbone. Kotak is saying, in this tribal world, these choke points matter more than ever. And India is dangerously exposed to both of them. He warned that the world could be entering a phase where crises do not resolve themselves and return to normal. For 80 years after World War II, every shock, oil crises, financial crashes, pandemics, eventually resolved. The Davos assumption was that the global system would self-correct. Kotak is questioning that assumption. He is saying, what if this time it does not correct? What if the Iran war does not end quickly? What if the tribal mindset hardens? What if the old globalized order simply does not return? Let us bring this down to hard numbers. Because Kotak was very specific, and those specifics deserve attention. He said that India's current account deficit, the gap between what India earns from the world and what India pays to the world, is manageable at -1% of GDP when oil is at $60 a barrel. That is the comfortable zone. That is where India was for much of the last 3 years. If oil rises to $100 per barrel and stays there, which is exactly where it is now, that deficit widens to -2.5%. From a manageable 1% to a stressed 2.5%. And Kotak warned that in a worst case, if the war drags on, if the Strait of Hormuz remains disrupted, if oil stays elevated, India could find itself needing to fund a current account deficit not of $40 or $50 billion, as in comfortable years, but potentially $150 billion. More than 3 times what India is used to managing. A current account deficit of that scale drains foreign exchange reserves at pace. It weakens the rupee. It drives up import costs across the economy. It tightens financial conditions. It makes borrowing more expensive. And it concentrates the pain on the people least able to absorb it, lower income households for whom fuel, food, and transportation represent the largest share of spending. Here is where Kotak's speech became genuinely uncomfortable for the room he was addressing. Because he was not just warning about a global shock. He was criticizing Indian industry, specifically, for being complacent. He said Indian businesses have had a great last 10 years. Growth was strong. Credit was available. Markets were rising. Exports were expanding. And that success has created a comfort zone, a mindset that assumes good times will continue, that shocks will pass, that the government will always provide a cushion, that things will return to normal. He told the room to stop relying on the government to be the shock absorber. He cited the example of American businesses in the 1970s oil crisis, where it was the private sector, not the government, that drove the energy transition away from imported oil. He said Indian businesses need to do the same. Move to renewables at scale and speed. He pointed to China, where 60% of vehicles now run on electricity, and said India needs to be thinking at that scale, not in increments. He also issued a broader call: India needs to reshape its economy on a low-cost, high-efficiency model. Not just protect existing businesses and profit margins. Actually restructure. Redesign. Become more resilient. He ended with a phrase that is now being quoted across Indian business media: prepare for paranoia before the event. Do not wait for the shock to hit you. Prepare for it now. So let us bring this to ground level. What does Kotak's warning actually mean for a person watching this video right now? It means that the stable petrol and diesel prices you see at the pump today are not permanent. The government has been absorbing the cost difference between what oil companies pay for crude and what consumers pay at the pump. That gap is widening every week. At some point, and Kotak is saying that point is close, it becomes unsustainable. It means that food prices, transport costs, and electricity bills are all connected to energy prices. When energy transmission happens, and it will, inflation goes up. Purchasing power goes down. The rupee buys less. Your savings erode faster in real terms. It means that if you have been planning a foreign holiday on the assumption that the rupee will hold steady, or assuming that your business costs will stay flat, or investing without accounting for the possibility of a significant economic disruption in the next 6 months, Kotak is telling you to reconsider those assumptions today. And it means that Modi's 7 appeals, which we covered in our last video, are not political messaging. They are economically grounded advice from a government that is looking at the same data Kotak is looking at and reaching the same conclusion. The shock is coming. India needs to reduce its exposure before it arrives. Uday Kotak built a fortune worth billions by being right about economic trends before most people saw them. He does not speak publicly to generate headlines. He speaks because he believes what he is saying. And what he said today at one of India's most important business forums was a clear, unambiguous alarm. The last 2 months have been false comfort. Indian consumers have been shielded from a war that has set the global energy market on fire. That shield is thinning. The shock is on its way. And the only question is whether India, its businesses, its households, its policymakers, chooses to prepare for it now, while there is still time, or waits to be surprised. In one line, Kotak's entire message was this: do not mistake the absence of pain for the absence of danger. Think about that. Tell me in the comments, do you believe India is truly prepared for what is coming? And if BharatLens is giving you the analysis that matters, subscribe. This is the lens through which India sees the world.